Hello friends, greeting from Freedom Factory. Today we are again going to talk about another deduction which is not known to many people and therefore we just want to bring it to your notice. Again, as I am repeating that although this is allowed only in the old tax regime, it's not allowed in the new tax regime, but it is very important for you to assess what's your liability under both these regimes so that you can make an informed decision. Today we are going to talk about 80U, section 80U, which is part of chapter 6A. Please understand all these sections under chapter 6A reduce your income. They don't reduce your tax liability directly. Indirectly they will reduce tax liability, but actually they'll bring down your income, and therefore 80U is very important. Now, for whom is 80U applicable? 80U is applicable for assessees who are personally, physically or mentally challenged. Please understand this. It is for somebody who is physically and mentally challenged himself. It is not necessary that people who are mentally and physically challenged don't earn income. So there are people who earn a lot of income in spite of them personally being physically and mentally challenged. In this particular section, if your disability is between 40% to 80%, then you get 75,000. Of course, below 40% is not considered as a disability, challenge, physically and mentally challenged. So below 40% is not considered as a challenge. 40 to 80%, the deduction allowed is 75,000. If your disability, if the person about whom we are talking, the SSC, if his disability is above 80%, he will get a straight deduction of 1,25,000. And my dear friends, the very important part here, this is an ad hoc deduction. The meaning of ad hoc is that it means you don't need to submit receipts of expenses or anything. You just get it straight away as part of your deduction. So therefore all these deductions, these are very important things that we have spoken to you in the last few videos. Idea was to bring to your notice certain unknown exemptions, deductions which are there, so that you can take a very informed decision whether to follow the old tax regime or to go for the new regime. Friends, once you have taken all these deductions, okay, that is what gets you the taxable income. So you have gross total income, which is the total of the salary plus the house property income plus the capital gains plus the other sources and plus business and profession. All the income of all these heads is called gross total income, and from gross total income, when you minus all the 80C, 80D, 80DD, 80D, all these sections, you get something called taxable income, and your slab and your tax rate and tax slab is decided on this taxable income, which you have to be very careful. And again, finally, this is only eligible for the old tax regime. So please take care and understand this. You should make an actual calculation of your old tax regime and your new tax regime to find out in which one you have to pay minimum tax. You can reach out to Freedom Factory to understand and make this calculation so that we can help you save better tax. Thank you.